traders, Gary Wagner here just after 10 o'clock in Honolulu, 4 o'clock in New York. It is Tuesday, 11th day of August, 2015, and this is the Daily Report for Gold and Silver. Chinese have a saying, we live in most interesting times, and I certainly feel that that is appropriate today in that we had a unpegging or a devaluation of the yuan last night by the central bank in China. That, of course, amounted to a lot of domino effects in terms of various markets. Equities markets as a whole falling tremendously in the U.S., gold rallying, but rallying in quite a volatile manner. Currently trading up about $5 on the day. Call it 11.09. We are looking at spot at 11.0883. The low 10.94 and the high 11.1942. As I said, we had a most dramatic night as we watched this market trade and effectively try to take in the most recent news and data from China. Now, I put out a conditional trade recommendation, and basically what I said is, as long as we have in what I call the afternoon session, meaning after the break in the spot market, this market effectively trading at or above 1100 to go in and to enter a long position, put a stop at 1089. Want to pull up our daily chart, which is exactly what I did, and so I'm pegging our trade on the open in that afternoon session, and that came in roughly at 11.0450. So we're going to mark ourselves long at 11.0450, stop at 1089. Interestingly enough, after that trade was put on, the market, which was trading about $1 to $2 higher, began to sell dramatically off. Now you can see that on this tail here, taking it to the low in yesterday's session at around 92, 91, 92. Also, we had this market trade dramatically higher, trading up to this high at around 11.19. So not only did we get a pretty strong signal, an upside breakout in gold, but we also got quite a nice range, and I believe possibly a return to days of past, meaning where we had defined direction instead of sideways trading activity, and most importantly, a real strong potential for a key reversal in the market and a pretty strong upside move. And we'll talk about our targets and our current position throughout the show. But in essence, we talked about this $1,100 point, and really that was what precipitated the signal itself in terms of our strategy or exit strategy. One of our strategies is to simply put an OCO at around 1130. That's the first mark that I'm truly looking for the market to hit. We'll talk about some of the different marks, but to do that most effectively, what we want to do is to pull up a fib retracement of the most recent activity. And traders, that's exactly what I've just done. Now we're looking at our 720-minute chart, is in Japanese average format, and what we've done is we've put a basic fib retracement. This retracement really covers the price activity from these highs at around 1230 down to these lows right in here that come in below 1080, I believe 1071. So we're covering a pretty large range when we look at it. And the first mark that we'll want to take a look at is our 23% retracement. That comes in at roughly 1109, and that is the area of contention right now in terms of our first level of resistance that we'll need to see this market break through if we're going to continue to see it moving in a upward direction. The second area is a 38% retracement. That comes in at 1132. And that is where our basic first upside target really comes from. In other words, I believe that if we do have a key reversal, a key pivot point in the market, we are going to genuinely see this market come off the lows. This is that first level of resistance. We've tested it now twice, but we're trading right at that point, and I believe we will break through that point, but we could run into some resistance roughly at around 1130, and that's based upon this 38% retracement. And that was the reason that one of my strategies or suggestions is to basically have your stop OCO, one cancels the other, at around, I think I said 1128, 1129, somewhere in that area. In essence, what I am looking for with this kind of a move is we've, come from a high of 1230. We've taken it to a low of, call it 1070. Now, if we simply see this market move up to this retracement point, we might get something like this. In other words, a stair step back up, and this would be a logical place to look for some sort of a pullback. Of course, this is all data driven and data dependent, and whether or not the Chinese government tonight has another round of devaluing the yuan, that would definitely affect the precious metals market, specifically gold, and have a potential to move back to these most recent highs. And as I said, they came in at around 1120, 1121. So traders, we just took a look at what I believe are very, very short-term different levels of resistance, but I also want to take a look at our long-term key levels right now. As you know, this last move that we witnessed last month, propelling this market really below what I believe was a critical point, meaning that 61% retracement, and it is a 61% retracement of this large move to our record and historical highs above 1900, beginning at around 700. We really would need to see this market in terms of having a long-term bullish prognosis, trade and close above, really call it 1156 to 1160. So until we get to that point, and I should say if we get to that point, then that would be really strong technical confirmation that we are looking at some sort of a key reversal in this area. The other way that we can look at it is even maintaining our current bear count, 1, 2, 3, 4, 5. We've completed 5 with this leg down here. We could go into some sort of an ABC. And as I said, that's even within the confines of a bearish count. In other words, we had a 5 count that terminated really at these lows here. And then we would go into some sort of an A, a B, and a C. All things being equal, if we're still in a bear count, we would then return to our 5 count to the downside. Now, there's some key elements that we want to watch, and one of the primary ones, of course, is this key level here. On top of that, in terms of key levels, you really don't find one until about 1300. So for right now, maintain our current long position in gold. As I said, we're long at 1104.50. Maintain your current stop, 1089. You can also still have that OCO to get out at 1130, canceling the stop if that order is filled. And I can tell you this, we hit a high of 21 last night. If there is, and no one knows, but if there is another round of devaluing the Chinese currency tonight, you could easily see the precious metals pop to that area, if not a little bit higher. So there is a distinct possibility, although probability-wise fairly low, 20 to 35%, that we could see that OCO executed as early as tonight. Now, as far as silver's going, we did put out the same conditional criteria that was met yesterday. Traders that took that call are long silver roughly at 1526, stop below 1495. We do have the market trading wildly in gold, but a little bit calmer in silver, currently at 1531. We've seen a low of 1506 and a high of 1538 on the day. Currently trading up roughly 0.1%, nominally higher on the day. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for another daily update review. Bye-bye.